Howdy, everybody. Welcome to Liberty Call. Today is Wednesday, December 11th, 2024. Hope you're having a fantastical day out there in the interwebs. Kind of a mixed day in the markets. The blue chips were not as good, but the S&P and the NASDAQ were doing really, really well today. So I guess the CPI numbers that came out, everyone was in a good mood about that. So, all right. Well, before we jump into those said numbers, if you could do me a favor, give me some thumbs up, a like, share, subscribe, a follow, and press the notification bell. All righty, let's get into it. Dow Jones was down 0.22% today, 99 points, closed at 44,148. S&P 500 up 0.82%, 49 points, closed at 60,84. NASDAQ up 1.76%, 346 points, closed at 20,033. VIX down 3.67% today. It's at 1366. Canada was up 0.6%, Brazil up 1.01%, and Mexico down 0.16%. In Europe, Germany was up 0.42%, the UK up 0.26%, France up 0.39%, the Netherlands up 0.3%, Spain down 1.47%, Italy up 0.6%, Switzerland up 0.3%, and Portugal up 0.14%. Russian exchanges red again today. The MOEX down 0.47%, RTSI down 3.59%. And the overnight markets, the Nikkei in Japan was up 0.07%, Australia down 0.47%, New Zealand down 0.56%. In China, the Shanghai was up 0.29%, the Shenzhen component up a third. China A50 down 0.55%, DJ Shanghai up 0.37%, Hang Seng down 0.77%, and the Taiwan weighted down 0.64%. All right, so those are the markets for today. Let's hop over to the market recap and see what actually occurred. S&P 500 climbs after inline CPI cements Fed rate cut next week. All right, so it's settled. It's going to happen. Yassine Ibrahim has foretold it. All right, well, let's go ahead and get into this. The S&P 500 gained on Wednesday, driven by a resurgence in tech stocks after the consumer price index data aligned with expectations, solidifying predictions of a Federal Reserve interest rate cut next week. November CPI rose 2.7% year over year, a slight uptick from October's 2.6%, while core CPI, excluding volatile food and energy prices, climbed 3.3%. Analysts, including Morgan Stanley, viewed the report favorably, highlighting a deceleration in core services inflation, particularly in rents and owners' equivalent rent. This reinforces the likelihood of a 25 basis point rate cut at the Fed's December 17-18 meeting, with market expectations for a cut rising to 98%. Well, bank on it, folks. All right, the tech sector rebounded strongly, propelling broader market gains. Alphabet surged over 5%, adding to its momentum following the announcement of a quantum computing breakthrough, signaling potential advancements in computing speeds. Quantum computing from rigidity computing rode the wave, gaining another 7%. NVIDIA saw gains snapping out of its recent decline, while Broadcom rose over 5% on reports of collaborating with Apple to develop an AI chip. Tesla hit a record high, climbing 3% as investors bet on benefits from CEO Elon Musk's ties with President-elect Donald Trump. And wrapping up here, Dave & Buster's Entertainment plummeted 16% after announcing disappointing quarterly results and the departure of CEO Chris Morris. Macy's stock dropped 4% following a cut in its annual profit forecast, citing weak holiday demand. Adobe's earnings report is anticipated after the market close. And the combination of favorable inflation data and tech sector strength bolstered market sentiment, with investors eagerly awaiting the Fed's next move. All right. Well, let's hop over to some data, the November CPI. This comes to us via First Trust. Mr. Nate Guernsey put together this report. The November CPI, or Consumer Price Index, data revealed inflation remains above the Federal Reserve's 2% target, indicating stalled progress despite rate cuts. Headline CPI rose 0.3% month over month, 3.8% annualized, while the year-over-year reading increased to 2.7% from 2.6% in October. Even with a 3.2% decline in energy prices, overall inflation excluding energy grew by 3.2% in the past year, and core inflation excluding food and energy rose 3.3%. Housing rents, a key driver in core inflation, saw a modest 0.2% increase in November. Analysts suggest the measurement lag in housing rents may artificially inflate broader inflation metrics. However, supercore inflation, which excludes food, energy, goods, and housing rents, rose 0.3% month over month and 4.3% year over year, higher than the 3.9% recorded in November of last year. November marks the 45th consecutive month of inflation exceeding the Fed's 2% target. While the Fed has reduced interest rates by 75 basis points since September, it's expected to cut another 25 basis points at next week's meeting. Inflation pressures persist. This month's report underscores the ongoing challenges for the Fed, raising doubts about whether inflation can sustainably reach 2% target under the current policies. I don't think so. They probably should have kept raising interest rates at least to 6 or 7. That would have just made sense. And then, as the inflation went down, you could then pull your interest rates down above it. So, but again, no one asked me. All right, go to some news on oil production. This comes from Zero Hedge. WTI, West Texas Intermediate, holds gains as tank bottoms loom at Cushing Hub. U.S. production hit a record high. All right. Oil prices climbed on Tuesday, driven by the possibility of stricter U.S. sanctions on Russian crude and supported by U.S. inflation data that met expectations. Consumer prices rose 0.3% in November, shifting traders' focus to reports of potential sanctions targeting Russia's oil trade. Tightened restrictions could reduce supply, potentially raising prices before President-elect Donald Trump assumes office. Market attention turned to U.S. crude inventory data, which showed a divergence between API estimates and official DOE figures. The Department of Energy reported a crude stock drawdown of 1.425 million barrels and significant builds in gasoline plus 5.086 million barrels and distillates plus 3.235 million barrels. Cushing crude stocks also declined, nearing critical tank bottom levels, while U.S. crude production hit a record 13.6 million barrels per day. Despite the modest dip following the DOE data, oil prices held gains. WTI crude maintained its upward trajectory amid broader market optimism. OPEC revised its global demand growth forecast for 2024 downward, cutting projections by 210,000 barrels per day due to a deteriorating market outlook. Conversely, the U.S. Energy Information Agency, the EIA, shifted its forecast for 2025 from surplus to a balanced market, surprising analysts. UBS highlighted the potential for a tighter oil market outlook, contrasting earlier oversupply concerns. Well, we're pumping more than ever. I think there's a chart on here that shows this. Yeah, right here. So this, let me make it bigger for you. This right here is the U.S. production. And, you can see here, I mean, we just going up and up and up and up. And, it's a record high. It's more than we've ever produced on a daily basis. So, and I think this shows a much longer chart going back. Well, maybe not. So I can't tell. It's too hard to see. Anyways, all right. Well, that was that. Got one more article here. Has to do with the state of education and how much we're wasting money on it. So also from Zero Hedge, it's titled Still Stupid in America, authored by Larry Sand via American Greatness. So let's see what Mr. Sand had to say here. The U.S. public school system continues to face significant challenges with declining performance and increasing dissatisfaction among parents and experts. Steve Jobs criticized the system back in 1995, blaming union dominance for fostering bureaucracy and hindering meritocracy. Nearly 3 decades later, these issues persist. Yeah, personally, I don't think you should have public sector unions because the unions are advocating against the people. And so, I mean, when you have the state and the union, it's just basically two governments, colluding against the taxpayer. All right. Recent data underscores the severity of the problem. The 2023 Trends in International Mathematics and Science Study revealed sharp declines in U.S. math scores, with 4th and 8th graders regressing to 1995 performance levels. In comparison to 63 international education systems, the U.S. ranked 22nd for 4th grade math and 20th for 8th grade math. Similarly, the 2022 NAEP results showed only 26% of 8th graders were proficient in math, with even lower proficiency in U.S. history, 13%, and civics, 20%. Well, that explains the way people vote, if they don't understand civics and history, you're probably going to make some pretty stupid decisions with who you choose to elect. All right. Despite these dismal outcomes, the U.S. spent $1.2 trillion on education in 2022, far more per student than private schools, which often achieve better results. Critics argue that unions, great inflation, and lack of accountability in public schools contribute to the problem. Reform efforts should focus on empowering parents and creating alternatives. Expanding private choice programs, supporting charter schools, and increasing homeschooling are viable options. Homeschooling in particular has grown significantly, with over 3.2 million students now educated at home compared to 2.5 million in 2019. The solution lies in reducing reliance on government-run education and fostering competition and accountability, offering parents more control over their children's learning environments. Yeah, I would just get rid of the entire public school program. I mean, if I had the power to it, I'd go over to the county office here in where I live in Colorado and advocate to just shut down the school system. But we then would have to fight the state government, and I'm sure they'd put their foot down and say, no, you're not allowed to do that because we have to educate our children. Yeah, we're doing a great job of it, folks. I mean, frankly, if I were doing it all over again, I'd homeschool from at least up until 6th grade, and then beyond that, if, little Johnny had some genius or needed some advanced training or mathematics or science or something, you then would outsource that, via internet or they have pod systems and stuff around the country where you can plug into specific curriculum. So there's a lot of things, and it would save us a ton of money, and you get to spend more time with your kids, which is not the point of being a parent. So anyways, all right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'd be happy to help you get on track. All right. Well, like I said, that's everything that I had to cover for today. I hope everyone has a great evening, and I'll talk to everyone next time. Adios.